I used to think I was smart. I knew all the strategies: support, resistance, trend lines, breakouts, retests. I could draw zones with pixel-perfect accuracy. My chart looked like a battlefield map. But every time I entered a trade, something strange would happen. The market would flirt with my zone, then slap me out with a fake-out, over and over again. Until one night, staring at the screen at 2:37 a.m., account bleeding, I finally asked the question that changed everything. If I'm doing everything by the book, why am I still losing? And then it hit me. Support and resistance aren't lines on a chart. They're scars, psychological scars, echoes of trauma left by millions of traders just like me. People who bought too high, sold too low, held too long, or exited too early. Each zone isn't just price, it's pain. And every time price revisits that zone, the pain comes alive. Fear, regret, greed, FOMO. They all start whispering into the minds of the crowd. That's when I realized I wasn't trading with the market. I was trading with human memories. The S&R code isn't just about zones or candles. It's about understanding the invisible battlefield behind every reaction. The trapped traders praying for break-even, the profit takers waiting to strike, the FOMO crowd watching from the sidelines, itching to jump in. And the market makers, they know all of this. They design the traps. They hunt the weak. So, what if you stopped drawing lines and started reading emotions? What if every price movement was a story, and you knew exactly who was speaking? That's what this masterclass is about. Not just how to trade zones, but how to decode the entire emotional architecture behind them. Because once you see what's really happening behind those levels, you can stop reacting and start controlling. You can stop being prey and become the predator. This is not a trading strategy. This is a psychological weapon. And by the end of this journey, you'll never see a chart the same way again. Welcome to Trading Psychology Stick, where we decode price by decoding people. This content is for educational use only, not financial advice. The charts you're about to see won't just change how you trade, they'll change how you see. So let's begin. Right at the place every trader starts, a simple horizontal line, and a devastating misunderstanding of what it truly means. They told you to draw a line. Horizontal, clean, logical. This is resistance, they said. This is support, and you believed it. You drew your lines where price touched once, twice, 3 times. You waited. The market came close and reversed. Or broke through, only to snap back and mock your stop loss. Again and again. But the truth no one tells you? That line you drew isn't magic. It's memory. It's trauma. It's the collective psychological scar tissue left by thousands of traders who bled at that level. Imagine a battlefield. You weren't there when the first bullet flew, but the blood is still on the ground. When the market returns to that level, it doesn't see a line. It feels the echo. The echo of regret from those who bought too high and are now trapped. The silent tension of those waiting to break even. The hunger of those who missed the move and now see their second chance. S&R is not geography, it's psychology. It's a congregation point for unresolved emotions. When price nears a zone, you're not watching price action. You're witnessing the ghosts of old positions, the open wounds that never quite healed. The deeper the scar, the louder the scream when touched again. Every time price returns to that level, traders don't just see opportunity, they feel pressure. And pressure reveals identity. Some will close too early, some will jump in too late. And most will act not from logic, but from emotional flashbacks. The market has a PhD in finding your stop loss. It's like it has your home address. Here's what matters. You think it's a chart pattern, but it's a pattern of pain. And the ones who win, they're not the best at technicals. They're the best at empathy. They can feel what the crowd feels before the crowd even reacts. These zones are haunted houses of past emotion. Every time price returns, it awakens something dormant in the crowd. These are not fresh reactions. These are echoes, amplified over time. Regret speaks first. It shows up when price touches a level we should have acted on. I knew I should have sold there, it whispers. Next time, I won't miss. So, when price returns, that trader jumps in. Not from conviction, but from unresolved guilt. And guilt is a terrible decision maker. Then comes greed. Greed doesn't look backward. It lunges forward. It says, this is your last chance to catch the move. It doesn't care about structure, or confirmation, or risk. It cares about not being left behind. And so, it convinces people to enter just as smart money prepares to exit. Think back. How many times have you bought after telling yourself, I missed it last time, not again? How many times have you held a losing trade just a little longer, whispering, maybe it'll come back to break even? That isn't strategy. That's memory making your decisions for you. Support and resistance are not tools. They are testaments. They show us where the crowd broke, where it hoped, where it failed. The more you study price, the more you realize you're not trading levels. You're trading emotional residue. But what happens when these scars are guarded? What if, behind every level, stand not just feelings, but forces? Powerful, conflicting forces? Let's step deeper into this battlefield and meet the three armies waiting at every zone. Section 2, the three armies at the gate. Every zone you mark on the chart looks quiet, neutral, safe, but don't be fooled. Beneath that silence lies a standoff, a war of three factions, each with their own desires, fears, and triggers. And when price approaches, the battle begins. The first army is the trapped. These are the traders who bought too late or sold too early. They watch the market move against them, froze in denial, and now they wait, hoping, praying. Every tick closer to break even is a surge of adrenaline, a chance to escape, not profit, just relief. They don't dream of winning. They dream of not losing more. The moment price returns to their entry, they pounce, they close, and their exit becomes the pressure that stalls momentum, like prisoners rushing the gate the moment it cracks open. Then there are the profit takers. These are the disciplined ones, the early players, the ones who saw the move coming before the crowd even noticed. They're already in profit, deep green, and they've been waiting for this very moment. This is where their play ends. They don't hope, they execute. They see the zone not as opportunity, but as exit, as extraction, like snipers calling for the chopper after the mission's complete. When price hits the level, they offload their positions with cold precision. And that wave of selling, it's not panic, it's protocol. And finally, there's the FOMO crowd, the third army, the watchers. They miss the initial move. They've been staring at the screen, full of envy, full of urgency. And now, price is back at the zone, and they see their moment, their redemption, their second chance. They don't ask if it's safe. They just dive in. Buy orders flood the market. Hope floods their hearts. But in their rush, they fail to notice. They're buying exactly where the smart money is getting out. Quick question, which army do you usually join? Comment below, trapped, profit, or FOMO. Three armies, one battleground. And every S&R zone becomes a convergence of these clashing forces. The hopeful, the strategic, the desperate. When price arrives, all three respond. And the market reacts not based on pattern, but on who strikes first. Sometimes the trapped panic faster than the FOMO can buy. Price reverses violently. Sometimes the FOMO overwhelms the exits and blows the top off the zone. And sometimes the profit takers dominate, draining momentum so efficiently that the market simply dies there. What determines the outcome? It's not your line, it's not your time frame. It's the timing of emotion. Who hits the button first? Who blinks? Who folds? Here's the thing. Your job as a trader is not to predict the winner. It's to recognize the alignment. When the trapped are silent, the profit takers are done, and the FOMO is rabid. That's when breakouts happen. When all three hesitate, that's your rejection. And when all three go full chaos mode, that's your trap. Forget the line. Study the armies. Feel the pressure in the zone, not the candles. And when you can see the battlefield clearly, you'll know exactly when to strike and when to disappear. But there's more. Behind every battle is a memory, a deeper pattern. Next, we'll explore why these zones don't just trigger action, but awaken ghosts, and how the most powerful levels are not current, but historical. Section 3, the sniper's strategy. The novice stares at the chart and sees opportunity. The pro stares at the same chart and sees a trap. The difference isn't knowledge, it's timing. And nowhere is that difference more brutal or more profitable than at the edge of a zone. This is where the sniper lives. While the crowd gets ready to charge the gates the moment price touches a level, the sniper does nothing. They watch, they wait. They don't enter on the first touch. That's for the impatient, the eager, the ones who need to be in a trade just to feel alive. The sniper is not there to feel alive. They're there to survive and win. They understand that the first contact with a zone is noise. It's emotion, confusion, and misinformation all wrapped in one seductive candle. Price might spike through the level. It might bounce slightly. It might fake a breakout. That's fine. the sniper doesn't flinch. They know that real entries come not from the level itself, but from how price behaves around it. So they wait for the tell, a sign, a signal that one of the armies is losing control. Maybe it's a long wick rejection candle, maybe a bearish engulfing pattern, maybe RSI divergence, or simply the shift in candle body structure that says, this move has no conviction. That's the gunshot, that's the signal. Then, and only then, they act. They don't chase, they place, clean entry. Logical stop loss, usually just above the wick that flushed out the impatient. And then, they disappear. No tweaking, no second guessing. The job is done. If the trade works, it works. If it fails, they retreat with minimal damage. But they never bleed from emotional reactivity. Most traders are like sword fighters in a gunfight. They're up close, clashing with the market, hacking away, hoping to win through sheer effort. But the sniper, one shot, one clean hit, that's all. And the beauty is, you can spot them. Because right after a false breakout, when price reverses with precision and doesn't look back, you'll notice one thing. The sniper was already in. Not because they predicted it, but because they understood the pattern of exhaustion. They don't need to be first. They just need to be right after the wrong. And that's what makes them lethal. Take 10 seconds, close your eyes, think about your worst trade. Where did you place your stop? Who do you think took it? Breathe. Let's continue. Do you really need to catch every move? Or would you rather catch only the cleanest ones when the market has revealed its hand? There's a calm that comes with this style, a confidence, a stillness. The sniper doesn't look for action. They look for reaction. They wait for others to show their cards before moving in. And in doing so, they flip the script, from chasing to baiting, from reacting to exploiting. But what if the sniper arrives and the zone breaks clean? No rejection, just a violent breakout. What then? Is the move already gone? Not quite. Next, you'll discover why smart traders don't chase the breakout, but instead wait for the market to come back to them with something called the retest. Section 4. The art of the retest. Breakouts feel like fireworks, a sudden surge, a long green candle slicing through resistance, or a sharp red one crashing through support. The crowd goes wild, chat rooms explode, screens light up. FOMO ignites like a spark in dry grass. And just like that, everyone wants in. But the sniper, the strategist, they smile and wait. Because real traders know the breakout isn't the opportunity, the retest is. Think of the breakout like a door being kicked open. The explosion is loud, the move is fast. But smart money doesn't chase the guy who kicked the door. They're waiting on the other side, at the next decision point, with a plan. Because most breakouts are emotional, FOMO-fueled, thin volume driven, and without follow-through, they become traps. The market knows this. It lets price pierce through the level to bait the impatient. Then it pulls back. And that pullback, that's your moment. A true retest isn't just a return to the old zone. It's a psychological checkpoint. It's the market asking, do you really believe in this move? Because if support was once resistance, this is where it must prove itself. If the level holds, that's conviction. If it fails, the breakout was a lie. Here's what you watch for. Price breaks through a level, then slowly drifts back down. Not with panic, but with grace. It taps the old resistance like a soldier knocking on a familiar door. It pauses. It hesitates. The crowd holds its breath, and then, if it's real, it launches again. That hesitation is gold. Because this is when emotions are at their peak. The FOMO crowd who missed the first move is now frozen. Do I chase? Wait? Jump in now? The trapped bears who thought it was a fake out are now questioning their positions. And the sniper? They've been here before. They know exactly what to look for. Not just structure, but symmetry. The retest should respect the old level. Wick through it slightly maybe, but not collapse. It should reject with authority, showing that what was once a ceiling is now the floor. This is where you enter. Clean, logical. Your stop goes just beyond the zone, protected by logic, not hope. And if it holds, you're on board the real move. One backed not by emotion, but by confirmation. The retest is a second chance, not just for price, but for you. A chance to reset your mindset, to trade not from urgency, but from structure. It's where you stop being the trader chasing noise and become the one listening for signals. But here's the twist. Not every retest is honest. Some are engineered, designed to make you believe right before they flip and crush you. Next, we dive into the most deceptive patterns in trading, the ones that punish both the early and the late, the manipulation playbook that feeds on your predictability. Section 5, the manipulation playbook. At first, it looks perfect. The candles line up, volume kicks in. Price finally punches through that stubborn resistance. The crowd roars. This is it. The breakout they've been waiting for. And just like that, buy orders flood in, flooding the market with belief. But beneath the surface, something else is happening. Something colder, smarter, predatory. Because not all breakouts are built to continue. Some are built to deceive. Enter the false breakout. The deadliest move in the market. Not because it fails, but because it succeeds just enough to make you commit, just before it slams shut. Like a trap disguised as opportunity. This is where the wolves feast. While the average trader watches the breakout candle and hits buy with trembling fingers, the experienced trader leans back. They're watching who is entering, how fast, how loud. And they know when a breakout is too clean, too fast, too obvious, it's often bait. Market makers hunt stops like my cat hunts laser pointers, with surgical precision and zero mercy. The false breakout is a psychological ambush. It weaponizes hope and speed. Price pushes past the key level, enough to trigger breakout traders, enough to hit stop losses of those who were short. It flushes everyone. And just when it seems the breakout will run, it turns. Fast, violently, trapping longs, triggering panic, and feeding on the liquidation. But this isn't chaos, it's choreography. You thought your stop loss was safe, tucked neatly behind a support level, placed by the book, just below the previous low or just above resistance. Logical, measured, disciplined. But then it hits you. Again, that uncanny moment where price spikes just enough to take you out, only to reverse instantly in your original direction. It feels personal, it feels cruel, it feels designed because it is. This isn't coincidence. This is strategy, and the ones executing it, they're not psychic, they're predators. Market makers, large players, smart money. Whatever name you give them, they all operate on one principle. Liquidity is life, and your stop loss, that's their meal. Stop losses aren't invisible, they're clustered, predictable. You've been taught to place them safely beyond obvious levels, but that's the problem. They're obvious, which means they become magnets, targets, coordinates on a map that big players can see as clearly as you see your moving average. So, what do? They engineer price action to go there, a fake push into the zone, a sudden spike, a candle that breaches the level just enough to trigger your exit. Your stop-loss market order flooding the books, giving them the liquidity they need to enter on the other side. It's not random, it's extraction. Imagine this, a large player wants to build a long position, but they can't just click buy. Their size would move the market. They'd get terrible fills. And where are those sell orders sitting? Below support. Where your stop-loss lives. So they push price down, fast, hard. They generate fear, trigger stops. Your position gets closed, automatically selling into their hidden limit buys. And once they've filled up, the market turns. Not because of trend, but because the predator has finished feeding. The anatomy of a trap is simple. Build expectation. Price approaches the zone slowly, baiting attention. Trigger emotional commitment. Breakout or breakdown lures traders in. Flush stops, violent wick through expected level. Reverse, exit liquidity has been secured. But here's what they don't want you to know. Once you see the trap, you can set your own. I remember the day I finally caught a stop hunt in action. Price approached support, dipped hard with a massive red candle, wicked below the obvious level by 15 pips, then snapped back up. The whole thing took less than 60 seconds. But I was ready. I had my buy order sitting right where I knew the stops would trigger. That trade ran for 200 pips. Not because I'm special, but because I stopped thinking like prey and started thinking like the hunter. Most people treat breakouts like invitations. The wolf treats them like traps to be disarmed. And every false breakout is an opportunity because it creates imbalance, panic, and vacuum. So ask yourself, how many times have you entered on a breakout only to be slammed the next candle? How many times did it feel like the market waited for you? Maybe it didn't wait. Maybe it was built that way. You're not the victim of bad luck. You're the victim of predictable behavior. And the moment you become unpredictable, calculated, calm, surgical, You flip the script. You stop being prey. You start playing the wolf's game. But what if there was a way to verify whether the wolves are present or absent? What if you could hear the market's true voice, beyond the deception? Next, we turn to the most underutilized truth teller in trading, one that never lies, one that always speaks if you know how to listen. Section 6, the volume revelation. Price can lie, it fakes breakouts, it teases patterns, it paints illusions. But volume tells the truth. It's the whisper beneath the noise, the pulse behind the candle. It doesn't show you where price is, it shows you why it got there. And if you know how to listen, it will tell you what comes next. Most traders glance at volume like background music, there but ignored. They chase candle patterns and S&R levels, thinking that's where the story is. But the real story lives in the weight behind the move. Volume is conviction. And conviction is the difference between a puff of smoke and a detonation. Picture this. Price breaks above a resistance zone. The candles surge. Your breakout setup screams, go. But you check the volume and it's thin. Weak? Like someone shouting into a canyon and only hearing their own echo. That's not breakout energy. That's desperation. That's the market trying to move with no one behind it. And what happens next? Reversal. Collapse. A graveyard of premature trades. Now flip it. A strong level is tested. Price hesitates. Then boom. A candle erupts, slicing through with volume like thunder. That's no accident. That's real participation. That's institutional money pushing with purpose. And that's where you follow. Not the candle, but the conviction behind it. Volume gives you X-ray vision. A candle might look powerful, but if it's floating on low volume, it's hollow. A reversal might seem uncertain, but if it spikes with a volume climax, it's a battle won by force. Learn to see beyond color and size. Ask, did anyone care about this move? Challenge. On your next trade, ignore price for 30 seconds. Just watch volume. What story does it tell? Here's how volume speaks. Low volume breakout? Likely fake. Cautious crowd. No consensus. Expect rejection or retest. High volume rejection? Real defense. Bears are present. That level matters. Volume spike at key level, followed by silence. Liquidity hunt complete. Reversal incoming. Gradual volume buildup with price compression. Pressure cooker. Watch for explosion. Volume is not confirmation. It's context. And context is everything. It tells you not just what happened, but how much belief was behind it. But beware. Volume without structure is noise. Don't read volume in isolation. Pair it with levels, with price action, with narrative. You're not just watching bars rise and fall. You're reading intention through participation. Here's a story. A trader sees a clean pin bar at support. Textbook. He buys. It fails. Why? No volume, no belief. The market gave him a shape, but not a soul. Without volume, that pin bar was just a shadow. Empty. Another trader waits. Price returns. This time, same pin bar, but with a volume climax. Now it's not just a shape, it's a shout. He enters. The market launches. Same candle. Different energy. And that's the difference between guessing and listening. Because in the end, price is the voice, but volume is the tone. And tone tells you whether the speaker is bluffing, begging, or commanding. So listen closely. But confluence isn't enough. Even if everything lines up, you still face your biggest enemy. Not outside the chart, but within your own habits. Next, we expose the most lethal sins traders commit at zones, even when they know better. These aren't technical mistakes, they're psychological self-sabotage. Section 7, the confluence factor. Most traders rely on one signal. A single line, a single pattern, a single rule they cling to, like a life raft in a storm. And that's exactly why they drown. Because the market doesn't reward the simplistic. It punishes the predictable. But there's a way to armor yourself. Not with more indicators, but with overlapping logic, with confluence. Confluence is when multiple truths collide at the same point. Not guesses, not feelings, but undeniable data pointing to the same zone, the same decision, the same outcome. It's not magic, it's alignment. And in trading, alignment is power. Picture a price level. Alone, it might mean something or nothing. But now, layer onto it. A rising trend line intersecting from below. A Fibonacci retracement at 61.8%. A major moving average flattening across the same area. A key psychological number. Suddenly, this is no longer a zone. This is a fortress, a pressure point where multiple factions agree. Something's about to happen here. And that's when the market listens, because the more reasons price has to react, the more participants are watching, the more they agree. And agreement is what moves markets, not indicators. But here's the catch. Confluence is not about stacking random tools. It's about correlated logic. Think structure, momentum, behavior. When price approaches a support zone and the RSI is showing divergence and volume is shrinking and it taps a trend line, that's not noise. That's alignment. That's where you take the shot. Think of each layer as a shield. Alone, they crack under pressure. Together, they hold. Confluence protects you not just by increasing probability, but by giving you context. It tells you this is not just a candle. This is the intersection of crowd memory, structural tension, and behavioral imbalance. And the best part? Confluence makes you calm. Because when you act on confluence, you're not reacting to impulse. You're responding to structure. Your stop loss isn't emotional. It's logical. Your entry isn't hopeful. It's measured. You stop fearing every tick against you because you built the foundation of the trade like an architect, not a gambler. Even predators respect confluence. Because they know, zones with alignment attract real players, and real players don't panic on noise. They don't flinch at fakeouts. They defend their positions like territory. So, when you find confluence, you're not just entering a trade. You're entering with backup. But beware, confluence without clarity becomes clutter. Don't throw in 1,000 tools and call it conviction. The question is not how much you stack, but how aligned they are. Is this level a coincidence, or is it a convergence? Are you reacting to one candle, or to 5 streams of evidence flowing into one decision? Because in chaos, the trader with the most clarity wins. Section 8. The Cardinal Sins. You can have the perfect setup, a level respected by history, confluence stacked like armor, the sniper's patience, the wolf's instinct, and still bleed. Not because the market beat you, but because you betrayed yourself. These aren't market failures. These are psychological sins. Quiet habits that drain accounts with surgical precision. Sin number 1, vengeance trading. The market stopped you out 5 minutes ago, and now you want revenge. Price is nearing the same zone again, and instead of reassessing, you re-enter. Not with strategy, but spite. You tell yourself, it owes me. But the market owes you nothing, and the moment you make it personal, you've already lost. Trading from anger is like boxing blindfolded. You hit nothing and get hit everywhere. Sin number 2, entering before the candle closes. You see the rejection forming. The wick looks good. You're already hovering over the buy button, but the candle hasn't closed. You jump in early only for the candle to flip and close against you. Why? Because you wanted to feel in control, not be in control. The candle is a story. Let it finish its sentence. Confirmation doesn't cost you edge. It saves you from chaos. Sin number 3, drawing S&R on the 1-minute chart. Micro trading makes your signals weaker, your decisions faster, your mind shakier. You're reacting to noise, not structure. Zooming in too far is like reading one word and trying to guess the entire novel. Structure needs breathing room. Context needs time. Don't trade a heart monitor. Trade a heartbeat. Revenge trading is like drunk texting your ex. It feels justified at 2 a.m., but the morning brings only regret and margin calls. Sin number 4, placing your stop loss where everyone can see it. Logical stops become predictable stops, and predictable means targetable. You think you're being disciplined. You're actually being visible. Market makers don't need to beat you. They just need to know where you'll bleed. Protect your stop like a secret, not a standard. Sin number 5, believing this time will be different. You lost at this level before. You ignored confirmation. You chased the breakout. You swore you'd never do it again. But here you are, finger hovering, hope rising, telling yourself, this time it'll work. No logic, no change, just a new trade on top of old behavior. But the market doesn't care about your intentions, only your actions. Pause here. Which sin hits closest to home? Drop the number in comments. No judgment. We've all been there. Each of these sins is subtle. They don't feel dangerous, but they compound. They stack like small leaks beneath a boat, unseen until you're underwater. And what's worse, they feel like trading. They keep your heart racing. They keep you busy. But motion isn't mastery. Action isn't advancement. And busy is the most expensive illusion in the game. The solution isn't more knowledge. You already know what to do. The solution is self-command. The trader who wins is not the one who knows more. It's the one who violates less. But what if there was one more piece to this puzzle? One that could help you build an entirely new trading identity. Next, we go deeper. Not into charts, but into you. Into the subconscious patterns that keep you chasing, fearing, hesitating. We'll rebuild the trader within and shift your identity from gambler to strategist. Section 9, the art of strategic waiting. There's a moment every trader faces. Charts open, signals lining up, fingers twitching on the mouse. The setup isn't perfect, but it's close. Close enough to justify. Close enough to convince. If I don't take it, you tell yourself, I might miss it. So you click. Not because the trade demands it, but because your restlessness does. And that's where the bleeding begins. The market doesn't reward activity. It rewards precision. But precision only exists in stillness, in the space between signals, in the moments when the average trader jumps in, and the exceptional trader watches, waits, does nothing. Not trading isn't passive, it's powerful. It's the most active form of discipline. It takes more mental strength to sit on your hands than to click a button. Why? Because doing nothing forces you to confront your deepest weakness, your addiction to motion. In trading, motion feels like progress. Entries feel like effort. But the truth? Every unnecessary trade is a tax on your patience, and the market collects without mercy. Professional traders spend most of their time waiting, scanning, watching. They don't force opportunity. They recognize it. They know that the market isn't a machine you beat into submission. It's a rhythm you tune into. And if the song isn't right, they sit in silence. Before we go deeper, pause the video. Look at your last 5 trades. Which army were you in? The trapped, the FOMO, the profit takers? Be honest, then come back. They've internalized a simple truth. Money is made in the waiting. The sniper doesn't fire because they're ready. They fire because the target is. Until then, the scope stays still, focused, detached. Think about this. How many trades have you taken just to feel productive? How many entries came from boredom, fear of missing out, or the pressure to make the day count? And how many of those trades gave you anything but regret? The cost of impatience isn't just losing money. It's breaking your rhythm, damaging your confidence, training your mind to mistake activity for skill. And worst of all, it clouds your vision. Because when you're always in a trade, you're never truly observing the market. You're reacting to it, blindfolded. Doing nothing, when done with purpose, is mastery. It means you have standards. It means your capital is reserved for clarity, not noise. And clarity is what separates the gambler from the strategist. Here's the paradox. The more okay you are with not trading, the more clearly you'll see the right trades. The less you chase, the more the market reveals itself. Why? Because your ego isn't fogging the glass. You're no longer trying to force profit. You're now inviting alignment. There's an elegance to stillness, a silent confidence. It says, I don't need this trade to prove anything. And that detachment, that's the final form of edge. How do you build this patience? By shifting your metric. Stop asking, did I trade today? Start asking, did I follow my process? Because process is the only thing you can control. And ironically, when you stop needing to trade, you start becoming a trader. Let's walk through a full scenario. How a professional reads a trade from A to Z. Not just the entry and exit, but the entire decision arc. Because mastery isn't about perfect setups. It's about perfect alignment with self. A candle prints on the screen. To most traders, it's just another bar. But to the strategist, it's a breadcrumb, a signal in the fog. And it's never about that one candle. It's about where it came from, what it means, who it traps, and where it leads. This is the difference between guessing and decoding. And this is what it looks like to read a trade. Not as a moment, but as a story. It begins days before the entry. The strategist notices a level that's been respected. Not once, not twice, but 3 times. A former resistance zone holding firm under pressure. Price has approached it again, this time from above. And with each tap, the reaction weakens. Wicks are shorter, sellers look tired. But he doesn't act, not yet. He marks the zone, then steps back. Asks the essential questions. What's the broader context? Are we trending? Are we ranging? What time of day is it? What's the volume doing? Is this level significant or convenient? Over the next few hours, price inches toward the zone. The volume fades, no aggressive buyers, no emotional spikes, just quiet anticipation. The strategist recognizes it as coiling energy, a pressure cooker ready to blow. Now comes the first clue. A wick dips into the zone. It pokes through the level by a few pips, just enough to flush early longs. The candle closes back inside. Trapped sellers. Liquidity flushed. He knows this isn't the entry, it's the reveal. The market is showing its hand. He watches for confirmation. The next candle forms a bullish engulfing pattern. Clean, full-bodied, volume returns. This is it. He enters, but not blindly. His stop loss is placed just beyond the wick that flushed the crowd. Not too tight, not too far. Protected by logic, not hope. His take profit, it's not random. It's measured, based on the next significant resistance, the next emotional memory on the map. He's not aiming for a home run. He's aiming for high probability flow. And now he waits. Price moves in his favor, slowly at first. Then momentum builds. A news event spikes the market, pushing price closer to his target. He doesn't get greedy. He doesn't adjust mid-flight. He breathes, watches, lets the story unfold. Then target hit. Trade closed. No celebration, no over-analysis. Just a quiet log in his journal. Date, setup, reason, outcome, lessons. The strategist doesn't measure a trade by profit. He measures it by alignment. Was the level valid? Did price behave according to plan? Was the emotion in the market predictable? If yes, even a break-even trade is a success. If no, even a profitable one is a lesson. Because mastery isn't about being right. It's about being aware. About seeing not just candles and zones, but actors, roles, scripts. The strategist isn't reacting to markets. He's reading characters in a play. But even the best strategist is only as good as his internal operating system. Because every trade you take is filtered through one lens, your mindset. And if that lens is cracked with emotion, bias, or compulsion, no amount of analysis will save you. So, next we go deeper, not into charts, but into you, into the subconscious patterns that keep you chasing, fearing, hesitating. We'll rebuild the trader within and shift your identity from gambler to strategist. Section 10. Rewiring your brain. No one starts out a strategist. We all begin as gamblers, chasing wins, fleeing losses, worshiping luck, and praying to patterns we barely understand. We place trades not to execute a plan, but to scratch an itch, to feel alive, to feel in control. And we call it learning. But what we're really doing is gambling, and the market knows it. The gambler lives in reaction. They see green and feel FOMO. They see red and feel fear. Their trades are impulses dressed up as plans. They don't have systems, they have moods. Confidence after a win, desperation after a loss. Hope wrapped in a candlestick, fear masked as risk management. But the strategist, they live in response. Not emotional, intentional. Not because they're robots, but because they've reprogrammed the most important software in trading, their mind. Every trading decision filters through the same mechanism, your brain's reward system. And that system is ancient, primitive, built for survival, not markets. It doesn't care about setups. It cares about dopamine. Every time you enter a trade, your brain spikes dopamine like a gambler pulling a slot machine. Will I win? Will I lose? Let's find out. This creates addiction loops. You start to crave the act of trading more than the outcome. Winning becomes secondary. Stimulation becomes primary. This is why you overtrade, why you revenge trade, why you violate rules you wrote yourself just 3 days ago. To stop trading like a gambler, you must stop feeling like one. That means you need new neurological wiring, new emotional patterns. You need to link dopamine not to entry, but to execution, to discipline, to sitting out, to following process. The strategist rewires their brain through ritual, journaling, checklists, affirmations. They build habits that anchor their identity to calm, clarity, and control. They don't chase the high of a win. They chase the high of a flawless execution. They train their mind to delay gratification, to accept boredom, to find comfort in inaction, because they know, in trading, stillness is power. And when they lose, they don't spiral, they analyze, because they know the market didn't betray them. They betrayed their framework. Losses aren't failures, they're feedback, and feedback is how systems evolve. So, how do you rewire? You start with self-awareness. You stop lying to yourself. Admit the patterns, the tilt, the neediness. You track it, label it, interrupt it. Then you build new neural loops. You reward non-trades that followed the rules. You celebrate exits that respected your stop loss. You mark moments of discipline with more pride than moments of luck. And slowly, your brain rewires. Your identity shifts. You stop being the trader who says, "I hope this works." And you become the one who says, "If this doesn't fit my plan, I don't touch it." That's not just a mindset shift. It's a biological upgrade. Because the market doesn't care what you want, but it always pays those who earn alignment. And you can't align with the market until you first align with yourself. But here's the real secret. Even once you've rewired your brain, mastered your entries, and tuned into the psychology of price, you still need one final key. One last perspective shift to see the market as it truly is. Not as lines and candles, but as reflections of human memory. Next, we tie everything together and reveal the ultimate truth about support and resistance, that you're not trading levels. You're trading the echo of every trader who came before you. Section 11. The new S&R mindset. Forget everything you thought you knew about support and resistance. The lines you drew, the patterns you memorized, the zones you copy-pasted from trading courses. None of it matters unless you understand what they really are. Support and resistance are not about price. They're about people. They are not walls. They are memories. Collective emotional imprints left on the market by thousands, sometimes millions of traders who experienced fear, hope, loss, euphoria at the same price point. And like any scar, those memories don't fade. They sit beneath the surface, waiting for price to revisit them, waiting for the old emotion to be triggered again. And when it is, the market reacts, not because of geometry, but because of psychology. That's the new S&R mindset. You're not drawing levels. You're identifying emotional flashpoints. You're not marking where price reversed. You're marking where people broke. That's why some levels hold for years, because trauma doesn't vanish. It lingers. It shapes behavior. And in trading, behavior shapes price. Here's the mistake most traders make. They treat S&R like static tools. They draw lines and expect obedience. But the market isn't a robot. It's a reflection of us, of our patterns, our mistakes, our instincts. And every time price approaches an old level, it's not a technical moment. It's a psychological test. Who will flinch first? Who will remember the pain? Who will try to fix their past? That's what moves price. So, when you look at a chart now, don't ask, "Is this resistance?" Ask, "Who got hurt here? Who's still trapped? Who's watching this level and ready to act out of fear, greed, or desperation?" Because when you start thinking in emotion, not position, you stop reacting like the crowd. You start anticipating it. Support isn't a floor. It's a place where enough traders believe there's a floor. Resistance isn't a ceiling. It's a memory of regret, where traders wish they'd sold last time, and now swear they won't miss it again. And this changes everything. It means the chart is no longer a technical object. It's a psychological map. Every level, a trigger. Every reaction, a story. Every wick, a scream. You're not trading setups anymore. You're trading behavior. And behavior repeats. That's your edge. Because once you see S&R this way, you don't need 100 indicators. You just need clarity. You wait for price to approach a zone, and instead of predicting, you listen. What are the candles whispering? Who's getting nervous? Who's being baited? You let the story unfold. You become less active, but more accurate. You trade less, but win more. Because now, you're not fighting the market. You're flowing with the emotion that drives it. This is what separates the reactive from the strategic, the mechanical from the intuitive, the amateur from the master. And the final truth, you were never trading levels. You were trading the crowd's unresolved past. You were stepping into a shared hallucination and learning to see clearly through it. Now, as we close this masterclass, there's only one thing left to do. Seal everything you've learned into your identity. Because S&R is not just a tool, it's a language. And fluency in this language means freedom. Take a breath. Look back at everything you've just seen. Every candle we decoded, every trap we uncovered, every emotional battlefield we mapped out behind those simple horizontal lines. This wasn't a tutorial. It was a transformation. Because now, you no longer see support and resistance as static zones, but as living echoes of fear, of memory, of greed, of strategy. You no longer chase entries. You wait for stories to reveal themselves. You no longer rely on luck. You rely on awareness. You've shifted from drawing lines to reading emotions, from reacting to anticipating, from gambling to executing like a strategist. Before we transform your mindset, share this with one trader who needs to hear it. They'll thank you later. So here's what happens now. You close this video and open your charts, but this time you won't be looking for setups. You'll be listening for psychological friction. You'll be scanning not for patterns, but for pain. Not for candles, but for confession. And you'll wait. Not because you're scared, but because you've evolved. Because you know that discipline is an entry, that silence is a position, that clarity is capital. That's what this channel is about. That's what this community is built on. So, if this masterclass shifted something in you, if it felt like we weren't just explaining a strategy, but revealing a new lens for how to see the market and yourself, then don't disappear into the next tab. Don't vanish back into the noise. Stay with us. Comment below, Chapter X rewired my brain. Let me know which insight cracked you open so we can build from there. And if you're serious about becoming the kind of trader who trades human nature, not just candles, then subscribe, hit the bell, and share this video with one trader you know is stuck in the old way of thinking, the gambler's way. Because this isn't just education, it's evolution. And evolution happens in tribe, in rhythm, in repetition. We'll go deeper into entries, into exits, into journaling, into how to build a trading identity so strong you stop hoping for edge and become one. Remember, you were never here to trade levels. You were here to master behavior. And it begins with what you don't do next. Let's continue the journey together.